Hello and welcome to the day ahead. It is Thursday, September the 18th. I'm Andrew Gagan. Well, the local share market is set to open lower with ASX futures down just over 0.1%. This as the US Federal Reserve cutting interest rates by an expected 25 basis points, with Fed Chair Jerome Powell citing the need to support the economy in light of a weak jobs market.
While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point.
The central bank indicated it will steadily cut rates for the rest of the year, with the Fed projecting 2 more 0.25 percentage point cuts this year.
I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
New Governor Stephen Mirren, who joined the Fed on Tuesday, was the one dissenter in favour of a 0.5 percentage point cut.
This event projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027.
While Jerome Powell pointed to rising downside risks of employment compared to inflation, he said inflation risks still need to be assessed and managed.
We have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year.
After the cut, Treasury yields initially erased gains and turned lower before reversing course as Powell spoke. The US 10-year note rising 4.6 basis points to 4.07%. The 2-year finished higher at 3.51%. And the US dollar strengthened against most major peers, the Aussie dollar weakening to 66.5 US cents. And the Bank of Canada has cut its policy interest rate for the first time since March to 2.5% as it contends with weak economic growth and a tough outlook for job seekers, with expectations of more easing ahead. And a check of Bitcoin, it is trading at around 116,000 US dollars. Well, global stocks pushed to new records in choppy trade after the Fed's widely expected rate cut. The Nasdaq and the S&P closing lower, while the Dow closed higher after meandering during Jerome Powell's speech. Nvidia weighed on the Nasdaq, shares falling after reports said China's internet regulator had instructed the country's biggest tech companies to stop buying all of the AI leader's chips. Workday shares jumped after a report that activist investor Elliott Management took a more than $2 billion stake in the human resources software provider. Lyft shares surged on news that Alphabet's Waymo would launch autonomous taxi rides in Nashville next year with the ride-hailing firm. Shares in rival Uber fell around 5%. And General Mills maintained its annual sales and profit forecast as the breakfast cereal maker grapples with the rising economic uncertainty and softer demand in key markets, including North America. Well, oil prices have eased after data showed an increase in US diesel stockpiles, stoking concerns about demand despite the Fed cutting rates. Brent crude futures lower at $68 a barrel. Copper fell almost 2%, iron ore marginally low at $106 a tonne, and gold hit a fresh record high after the Fed's decision, reaching a new peak of $3,707 an ounce. However, it subsequently unwound those gains to be around $3,660 an ounce. Locally today, we get the labour force data for August, with most economists expecting the unemployment rate to tick up to 4.3%. And on the corporate front, all eyes will be on Santos, with the $36.5 billion takeover deal for Australia's second largest oil and gas producer collapsing. The Abu Dhabi National Oil Company withdrawing its bid just 2 days before a binding transaction was due to be signed. Well, that is your day ahead. We'll see you again tomorrow.